Wait, what? I can do that? This is Eric Bell with Wait, what? Financial matters that matter for business and the people that own them. If you missed last week's episode regarding parent homes, regarding real estate they live in or real estate they own, is especially informative for us baby boomers whose parents are aging. Take a listen. David Koffs and Brooke Wainwright did an excellent job. Welcome to this episode of Wait, What? Financial matters that matter for business and the people that own them. I'm fortunate today to have Perryn Holtrop with me. He is the Director of Integrated Solutions for Card Connect. Thanks for being here, Perryn.
Thank you. Thanks for having me.
You know, when you and I first met and we were talking about credit cards, business to business, business to consumer, I had no idea there was a difference. As a consumer, you just, use your credit card. You're not really thinking about what the business owner is going through. And you really enlightened me in terms of what was going on and how it affects their overall profitability.
Absolutely. Can
you talk a little bit about that?
Yeah. So, the thing about the credit card business, or what we like to say is payment processing, is, whenever someone hears about credit card, they always think about restaurant or hospitality. They don't realize that a lot of manufacturers, distributors, wholesale, or B2B are using credit card. A lot more people are wanting to use credit card in that environment. The days of net 30, net 60 is going away. People are like, hey, use your own credit card. We can get your own terms. And so there's a lot more involved with credit card, especially in the B2B space. And in the credit card space, there's actually different levels of transactions that are specifically designed for the B2B space. So, we definitely talk about that a little bit more and, kind of dive into it a little bit better.
Okay. So how do you calculate the rate on a credit card? Is it like 21%, like you see these crazy numbers out there, well, 14%?
Well, the rates, what the rates you're talking about on the interest, that's on the credit card side of the company that are issuing the cards for the consumer. The rate as far as on the merchant side to accept credit card is a little bit of a different animal. It's actually a very common question that we get, but it's kind of a hard question to answer because asking us what a rate is kind of the equivalent of going into a car dealership and asking them what your monthly payment is going to be without you telling them what type of car you want or them running your credit. They have no idea. So there's factors. So in calculating a rate, there's usually four things. First is the type of business, or what we call MCC, or merchant category code, which is similar to an SIC code that most people know.
A SIC code.
SIC code, exactly. So an MCC is a merchant category code. So depending on the type of business that you are, whether you're a restaurant or an HVAC company or e-commerce company, the cards or the rates on those cards are different, which I'll kind of delve in a little bit more. The second is the average size, the average ticket or average ticket size. So if you're a business that's doing an average transaction of $10, $20, or you're a business that does an average transaction of $2,000 or $3,000, there's going to be a variance of rates there. The other is the type of cards that you're taking. So, you can have a business that's taking a lot of debit cards or a lot of rewards cards or different types of cards like that, or a business that takes a lot of purchasing cards or B2B cards or corporate types of cards. Those are going to have a different factor. And then also the obvious one, which is the annual volume. Obviously, if a company is doing $20-30 million in credit card processing, as opposed to a company that's doing $200,000 or $300,000 worth of credit card processing, there's going to be a different factor there. So, the thing that to really understand in the business of credit card is there's a word or term called interchange. And interchange is kind of like a fancy word for wholesale. And what happens is the issuing banks of these credit cards, so if you have a Capital One card or Bank of America card or whatever type of card that you have, the issuing bank of that card is getting a percentage of that charge before anybody else. So there's a piece going to the issuing bank. There's a piece that's going to Visa and Mastercard Discover. And then the processor, which is the company that's actually processing the payment, is getting a small markup as well.
So that's where the fees go.
That's where all the fees go.
Okay.
So when you hear people say, 2%, 3%, 4%, and just giving a flat number, that's kind of half true because it really depends on the types of cards. So to give you an example, here's a perfect example. I can own a restaurant and you can own, let's say, a heating and air conditioning company. And we have let's just say John Doe is doing our processing for us. And he gave us the exact same rate or same cost to us both. And we both, let's say, do $100,000 a month in credit card processing, two entirely different different businesses. I owning a restaurant, you owning an HVAC company, there is a chance that I might pay less in fees than you because your business is a different MCC code, and the types of cards that you're taking there and the rates that are associated with your type of business can make it more higher for you. So it's really need to understand, there's a lot of variables that go into the different types of rate. It's not just a blanketed number.
So with equal size in terms of volume, industry is a big difference.
Absolutely.
Okay. Or MCC code.
Yes.
Is there a minimum size client that would qualify for your services anyway?
No, not really. What I look for generally is companies that are doing at least $100,000 a month in credit card processing. When you have a company that's doing some volume or a pretty decent amount of volume, we can get into more of the details. We can look at the statements and see what kind of cards they're taking, see how they're processing, and kind of delve in. When you get some of these businesses that are brand new, if it's an industry like a restaurant or something that we kind of have an idea, there's a lot of historical data out there that we can kind of have an educated guess on. But if it's a business that's a little bit off the cuff, or maybe a consulting service or something like that where we don't really know, it's a little bit more difficult to get really down and dirty on what the rate could be, because we have no idea what type of volume we're going to do, what kind of the types of cards you're going to take. So there's a lot of variables there.
I always see that people have Visa, Mastercard is always an option, it seems, at most businesses. Is there special pricing for Visa and Mastercard for certain businesses, or?
Yeah,
I know it goes back to the MCC code, size and volume, industry and volume, but is there certain discounts that they give you?
Yeah, for sure. So it looks like you did your homework there a little bit. So Visa and Mastercard actually give preferred pricing to B2B type of businesses. We kind of talked about a little bit. So let's say you're a business, does business with other businesses. So other business owners come and buy product or services from your business, and they're paying that business with a corporate card, purchasing card, or affectionately known in the industry as a P card. Maybe it's a GSA government card, those kinds of things. So Visa MasterCard looks, when that transaction goes through, Visa MasterCard is looking for certain information that's passed through at that point of transaction. And if about 26 different line items of information that's passed through at that time, and if that information is passed through upon that transaction, what we call a level 2 or level 3 charge, Visa MasterCard says, okay, you passed this information, so we're going to qualify you for a lesser interchange rate. And it basically comes down to risk. They say, okay, if you're providing these different line item information, we're going to go ahead and optimize that card and give you a lesser interchange because you're providing a lot more information. The trick, though, is a lot of companies don't realize or don't have the ability to offer this to merchants, so they don't bring it up. It does require some additional technology or software that very few companies have, usually only afforded to large companies that have ERP systems, enterprise resource planning, like SAP or those kinds of companies that are providing them this. So what we have is technology that provides or kind of affords this higher enterprise solution to smaller companies, so they can basically are in the same game as what the enterprise do. So what happens is when the card is processed through our gateway, it's recognizing these B2B cards, and if the information that's necessary to optimize these cards aren't there or aren't available, our system automatically populates that information for you to automatically optimize those cards. So we can walk into a company that's doing, a couple $1 million a year in processing, who's not getting these level 2 or level 3 optimized cards or the preferred pricing from Visa MasterCard, as you mentioned, and automatically optimize those cards and save them a ton of money.
So you just kind of went through how you can get that special pricing then, huh?
Absolutely.
Okay. I've heard two terms, gateway and processor. I don't know what the difference is between them, but you and I were talking about that, and I was still confused when I walked away. Can you kind of elaborate on what the difference is between a gateway and a processor?
Absolutely. Great question. One of probably the most or the biggest confusion or misnomers in the industry. So a gateway, whenever you have a transaction, specifically in a card not present environment, so like an e-com or a business maybe that does a lot of business over the phone, you're going to always have three components. You have the software, which could be an accounting software, any kind of software, maybe an app, e-commerce. And then you have a processor on the other end that's actually processing that payment. A processor is the company that's, if there's $1,000 on the card, it's calling the bank, saying, hey, here's $1,000. That's what we call authorizing that charge, capturing that money and putting it into the merchant's account. That's what a processor is. That's what you hear about maybe First Data or Global or Elevon. These are some of the processors out there. What a gateway is essentially those two components, software and processor, is basically a piece of software in the middle that makes those two talk. So essentially a gateway like Authorize.net or Stripe or some of these companies that you may have heard of, these are all gateways. The problem is a lot of the gateways have turned into what's called an aggregator, or without getting too technical, called a payment facilitator, where they're not actually processors. So they're kind of assuming the risk of the processing and doing it all in one, but they're actually not processors. So what we are at Card Connect is we are owned by First Data, now Fiserv. We just got bought out earlier this year. We are a processor and a gateway. So a lot of times what happens is if you're an e-com company, let's say you're a large e-commerce company and you want to be able to take payment on your website, you would call a processor, perhaps your bank, and say, hey, I want to process payments. You may already have an account with them. And then you would have to set up with a gateway company like an Authorize.net or another third-party company, which they're going to get monthly fees and transaction fees, and then your processor's also charging you a monthly fee, gateway, or a transaction fee and other stuff. So there's kind of double dipping of fees. So essentially what we are at Card Connect is kind of two of the three, as we talked about. You got the software company, we are a processor and gateway. A lot of times when we integrate our solution into your ecosystem, we're getting a way of having to buy or signing a contract with a third-party gateway, because we are a gateway as well, and we can alleviate having to pay additional fees. So a little bit of complication, but any type of software integration, POS, e-com, an app, any kind of company that's integrating a payment solution into their ecosystem, they're going to need a gateway and a processor. And what we do is kind of facilitate and kind of trim off some of the fat a little bit.
Someone's processor probably would never bring that up, I would think.
No, they're not.
Yeah.
And there's other companies that have a gate, that are processors that own their own gateway as well. The difference with us is our gateway does the auto population for the auto level 2 and level 3 transactions that we were talking about a moment ago, about optimizing these B2B cards. So that's kind of where we earn our keep a little bit. There are some other companies that out there that offer level 2, level 3 optimization on cards, but they have to actually enter the information in. So if they're in an environment where they don't know what information to enter in, or perhaps they don't have it to enter in, what happens is that card, that transaction gets what's called downgraded. So they're paying the highest possible rate on that particular card because the information that Visa Mastercard's looking for wasn't passed through. So with our system, it's kind of a fail-safe solution where that never happens.
So American Express, I have American Express card. And it always seems like when I go someplace, the vendor preferences take Visa, MasterCard, not American Express. That's been my experience anyway. Why is that?
American Express is on a different network. Obviously, their own card brand. Years ago, American Express was a little bit higher to take. To the merchant, it was more fees. It was a little bit more expensive. Not really so much the case anymore. American Express has done a great job over the years of negotiating different types of agreements and making their interchange rates comparable to Visa and MasterCard. So it's really not the case anymore. It's just kind of it's a very, very just common misnomer industry. It's one of those things that people just never really addressed. There are certain cases where Amex is a little bit more expensive in a card not present environment, but it really depends. And that's kind of where, a guy like me, a certified payment professional, certified to do this. I'm not just a guy that's coming in and saying, hey, let me look at your statements and let's see if I can knock off the price. We're delving deep. We're looking at how you're processing, what cards you're taking, how you're taking them, because all of that stuff affects the ultimate rate. And we want to make sure that you're processing those cards in your environment, in your industry, the best possible way possible.
All right, let's talk about you and Card Connect.
Okay.
You're a director with them. What is your preferred market from a geographical standpoint and also demographic, or I guess industry? Is there a preference or?
Not yes and no. I mean, obviously, me as a director of integrated solutions. My title specifically talks more to like dealing with the integration of our technology. So my job is kind of a hybrid between tech and sales. I prefer mostly B2B industries. When I first started in this career, I did a lot of restaurants, worked with a lot of multi-chain restaurants, national restaurants. So a little bit, tougher sale. Sometimes the profits are a little bit more skinny. So I focus on more on the B2B side, just partly because our technology is really tailor-made for that industry, one. And two, I like it because a lot of times when I'm going in and speaking with like a CFO or a CTO, which is usually the two people I'm speaking to, they already have a really good understanding on how credit card works. And I'm just kind of filling in the gaps on what we can do to make their process a little bit easier and their workflow easier and ultimately optimizing their cards. So it's not like I have to walk in there and have a full-on credit card 101 education to them. So sometimes when you go into some of these newer businesses or, restaurants or whatever, which totally not against them, the conversation sometimes is a little bit starting from the bottom as in terms of going into and having more a high level conversation. And I just prefer that industry. But ultimately, anybody that's taking credit card or wants to take credit card is doing a good sizable amount of volume are people that I generally want to talk to.
Geographically, any limitations?
No limitations. We have no territory. We can go anywhere in the U.S. We can do stuff in Canada as well. So pretty much North America. We get into other countries. That's where the limitations start. But I have accounts all over the country, so we definitely have no limitations in that regard.
So tell me about Card Connect, when they started, that type. Give me some background.
So Card Connect's kind of a cool company. Started around 2006. It was a handful of guys that had different business. They were in the payment space already. They formed a larger company, started Card Connect, and then they bought a company called Princeton Payments in I think 2011 or 10 maybe. I can't remember the date, but it was basically a company that where they built the technology that we have now was kind of started with that. And then they went public and were kind of kicking up dust. And then First Data, which is the largest credit card processor in the world, bought them out a couple years ago for about $1 billion, just shy of $1 billion. And then shortly thereafter, a company called Fiserv, Fiserv, came in. They're the 68th largest, or they're 68th on the Fortune 500 company, big in the banking industry. They merged with First Data. It was a $22 billion acquisition earlier this year. So now Card Connect is kind of like the B2B technology arm of First Data Fiserv. So we're a large company, but it's kind of cool because we're kind of boutique in the sense of the industries we go after, but we have we have the backing of a large big time player. So we're the largest fintech company in the world now.
So in terms of the client experience, I'm always trying to figure out if somebody calls you up, say, Perryn, do you do like an audit first to look at what they're currently doing? Or what's the process if they were to call you a business and saying, I want to do B2B with my clients?
Yeah, great question. So, obviously, I always like to preface, even though we focus on B2B, obviously anybody that's doing credit card that, that they feel that they're maybe overpaying or just not processing right. Generally, we'll get on the phone or meet them in person, ask them some questions, how they're processing, what are the pain points. A lot of times we'll walk into places where they have multiple software or multiple different platforms and they want it kind of all integrated. The reporting, larger transactions, usually reporting is really a big issue. We can come in and we're just looking at where we can make some things efficient. Ultimately, if there's an agreement to kind of move forward. Most of the time we'll get some statements from the client, a couple months worth of statements, so we can do an analysis on the cards being taken and see if there's any savings there. But ultimately, it's a full-on experience. It's not your typical, hey, let me get statements, let me slash your price. Sometimes we're not even lowering the price at all. They already have a good rate from their current processor, but we're bringing a lot of technology and just efficiencies to workflow. And so we're coming in and doing a full-on analysis, but not just on the payment side, just ultimately how they're taking payment. Maybe it's a company that is doing a lot more card present where they have will call or something and are not using the right equipment, doing everything we can to make sure the security, which we didn't really talk much about security, which is a big thing right now, breaches. And, we definitely have, some technology there to help with clients kind of mitigate a potential breach and an embarrassment to have to call their customer and say, hey, we got it. Someone took all your credit card information. So we can kind of touch on that a little bit more, if you will.
Yeah. Tell me more about that.
Yeah. So, in the credit card world, just like anything else, data and breaches is a big thing right now with cybersecurity. You hear a lot about it. Even in the medical industry, you have HIPAA compliance, things to do to make sure your data, the patient's data is secure. So credit card industry has similar. We have what's called PCI, which stands for Payment Card Industry. It's essentially a council that got together that the credit card brands or the card brands got together to create. And it's essentially, my analogy is kind of the HIPAA compliance of the credit card world, making sure data is safe and secure and you're not getting your information breached or hacked. You might have read in the news the last couple of years, Wendy's, Target, a lot of different companies that got breaches. And so Card Connect has some patented technology, what we call Card Secure, which is essentially a tokenization and encryption technology that when information is entered into our virtual terminal or however you're processing, that information is automatically encrypted and tokenized, and essentially it's rendered useless to anybody that was going to breach and take that information. So no information is ever stored on our client server. If you're processing a payment on your computer is just kind of the virtual terminal, if you will, but the actual process is done on our back end. So there's nothing that's stored on your computer. And the best way I can describe tokenization, people always ask me, what does that mean? We're all old enough to know what an arcade is. We used to go to an arcade and put $1 into a machine and it gave us 4 useless tokens that only worked in that particular place to run the arcade. If you walked outside that place, you can do anything with those tokens. And that's essentially what our technology is doing. That's what tokenization is doing. It's taking the information to process a card, turning it into a token that only works on our system. To where if someone was to breach or get in and get that token will be absolutely useless to anybody to use on the outside, what we call the dark web processing cards. So our technology brings a very big security component. It's kind of a conversation that sometimes gets swept under the rug because everybody's always focused on price, and savings. Mm-hmm. But, the technology that we have for security and to mitigate breaches is just as important, in my opinion, and ultimately can save a lot of embarrassment to future clients.
Well, and cost.
Absolutely.
Right, exactly. Wow, you answered a lot. I even understand it better than when we first met.
Sure.
Is there anything that I'm leaving out that I'm missing that business owner would want to know about Card Connect or credit card processing?
The thing that I would say the most is that when people think credit card, people think it's such a mundane conversation. And, we're kind of sometimes considered like the underbelly of the financial industry. People, we're somewhat of an unregulated industry. Anybody can do it. Everyone thinks the banks are the ones running it, and they kind of are. But, ultimately, it's a necessary service. People need it. Most people are paying with credit card these days. Less and less people are using cash. The younger and younger the generation becomes in business, less and less cash is being used. So, it's not something that people should think of as, I'll deal with it when I deal with it. It's always interests me. It amazes me actually that probably most businesses, 90% of their income comes from credit card, but it's the last thing that they worry about and they don't think it's that important. So just as important as you go and set up a corporation or get insurance or get a good CPA or a good tax person on your team or attorney, you also want to have a good credit card agent processor person, preferably certified, because he's going to pay the attention to that element of your business, which is the most important because that's where majority of your money's coming from. So that's what I would say about that.
I use my debit card a lot, and I had a breach recently, and the bank I had that debit card with called me. So that's a totally different conversation versus credit card.
Absolutely.
Okay, that's just coming from my bank account.
Yeah, but that's it's still,
it says Visa on it, though.
It's still the same.
Yeah.
So even though it's a debit card, but it's still processed as a Visa, Mastercard, and not to get too much in the weeds, but essentially when you're processing that card, there's a law called the Durbin Amendment, which was an amendment on the Dodd-Frank Wall Street Reform Act, which essentially when you're processing a debit card, there's an agreement with them and the law that's probably the only regulation of this industry is this particular law. When you're processing a debit card, there's always a fee. It's actually 0.05 and 22 cents a transaction that will get charged by the bank, all the regulated banks. So the regulated bank is any bank that has 10 billion or more in assets. they always get charged that. So when you go into, and that's kind of what we were talking about earlier about rate, if you're a business that's has customers that are using majority debit cards in a, let's say a restaurant industry or something, there's a chance that your rate is going to be a lot lower because you have lower rates on those debit cards as opposed to a guy coming in and using purchasing cards. So it's a really good question, kind of lends itself to what we were talking about earlier. That particular card will affect what your rate is. And that's ultimately what we're looking at when we're doing analysis on your statement to see, are you taking a lot of debit cards? Are you taking a lot of purchasing cards? Because that will certainly affect your rate. So if you're a business that's on a flat rate, let's say like what Square and some of these other companies will do, will put you on a flat rate and they put you on this high flat rate, they're counting on your business to doing a lot more debit cards because the overflow or the money that's left, I guess what I could say, the markup, if you will, on that charge, it's in their lining their coffers instead of the merchant. So our goal is to make sure that you're paying the least amount and being as most competitive. And if you're a business that takes a lot of debit cards and you think that you have a good rate, you may not, because the cards that you're taking, some of the savings can go into your pocket. So that's a really good question.
So that card secure, that seems like a big differentiator between you and the other competitors out there.
I would say card secure. I would say the auto level 2, level 3 optimization that we talked about, that's definitely the big differentiator for us. And then, having, without getting too technical, an open API, which ultimately, companies that want to integrate our gateway into their platform, we have the ability to send them the information, the API to integrate our technology into theirs. And that's usually when it's a really good situation, a really nice marriage, because then they have, all the bells and whistles of our technology in their software. So sometimes part of my job is working with companies, software companies, software developers that are looking for an integrated payment solution. Not only is it better for their customers, but it also makes their software more valuable. So, we work with a lot of these companies that have a SaaS model, which service as software as a service platform, which is a subscription based. A lot of companies are doing that, and be able to have, an integrated payment solution and, leverage sometimes a rev share where they can get some money on the back end and everything is all one. So, reporting, as I mentioned, it becomes huge. You got a software company that has an integrated payment solution. You don't have to log into another portal to make a transaction, see the transaction. It's all kind of in one place. And more and more and more, I'm noticing that larger companies or companies that are doing a lot more transactions, the reporting aspect of what we do is really, really important. And it's actually one of those things where reporting is one of the things that everybody needs and wants, but it's never really a pain point unless we bring it up and say, hey, what about reporting? Oh yeah, by the way, that's a nightmare. We need to fix that. So I would say our reporting tool is probably another differentiator in our technology for sure.
So, back to process, someone raises their hand and says, Perryn, I need your help from start to finish, provided they give you all the information you need. How long would it be before you can upgrade them to a better service with Card Connect?
Relatively quick. I mean, most of the time, the process is pretty transactional, usually within a couple of days. Obviously, I had an account that I'm working on this week where they had multiple different softwares, couple different profit centers. They're making money out in the field, e-commerce. They have a reoccurring billing option. There was a few kind of moving parts, a little bit more nuanced. That took a couple extra weeks just to get everybody on the same page. But typically, I would say, within 48 hours, within a week. It just really depends on how intricate their ecosystem is. But it's relatively easy. I mean, once we know all the numbers and we agree on the terms, I generally don't sign contracts with my client. I'm kind of, everything's performance based for me. So I want my clients to stay with me because they're happy with my service, not because I'm putting a gun to their head and say, you have to be here for X amount of time. But, once we get it submitted to underwriting, get approval, and we get all the necessary documents, I mean, sometimes I have clients processing with me within minutes sometimes, but usually I would say 48, 72 hours is a good ideal timeline. Sometimes it's more, sometimes it's less.
So underwriting's that quick?
Yeah, nowadays with us, it absolutely is. It's actually some of the cool things that happened this year with the merger with some of these bigger companies. We have a really robust underwriting department where a lot of this stuff is automated. So there's not actually a physical body looking at some of our deals. So, in money, just like anything else, there's risk levels. So if it's a business that's a lower risk, like e-commerce, or let's say a restaurant or an auto mechanic or something like that, that's going to get approved a lot quicker than perhaps some kind of ambiguous consulting firm where they got to delve into a little bit more of the numbers. But typically it's approved relatively fast.
Something I found interesting about you is that you're an entrepreneur and an inventor. and you got 5 international patents. Can you just some background on you a little bit?
Yeah, before I got into this business, I was kind of an enterprising guy, still am. Invented some cool products that are completely unrelated to the financial industry. Some security products for bicycles, and some different types of patents I have on some jars and some just different types of cooking products and stuff. Just saw a need to invent something and did, and have several patents and made some money on them, lost some money on them. I'm always thinking about stuff, always enterprising. It's kind of cool because I had my first business at 19. I used to own a car alarm business where I installed car alarms on cars, and that's ultimately how I invented some of the products I had. And over the years, done different things, and that's kind of what's cool about where I'm at now is the businesses that I work with are kind of all over the board, and I bring kind of a unique perspective to my clients because I'm not just a guy that's setting up their credit card. I have a lot of experience with different types of businesses. So sometimes I can bring some additional resources to my client that had nothing to do with why they're doing business with me in the first place. But ultimately, those resources and that knowledge helps me maintain my relationship with these clients and ultimately keeping my attrition real low. Because if they don't process with me, I don't make any money. So some of these unique experiences and businesses I've done over the years certainly lends itself to some more credibility and maintaining a relationship with my clients.
Yeah, value adds are always important.
Absolutely.
Well, thanks for being with us, Perryn. I really appreciate you coming in, taking the time.
Well, I appreciate you having me. This is awesome. Great questions. I can see you did your homework. I need to maybe take you on the road with me, man, and you can be my sidekick here.
Well, I can ask questions, but I don't know if I got the answers. To get hold of Perryn, please email me at eb@wait-what.biz or call me at 714-643-2500, and I'm at extension 420. Thank you. Next week is a discussion about the foreign national market versus permanent residents. Colin England did an excellent job.